Good evening, everyone. Today we're talking about due diligence and what is necessary in due diligence of an early stage startup. This is part of the SIA UK workshops that we're doing. And thank you for joining and good to see you all. So basically what I'm going to do is I'm going to go over the file that I use in order to do due diligence for a company. And this might drive Susie nuts because it's all about numbers, but I'm going to do that anyway because I'm all about numbers.
You have my support, and thank you for not giving me the numbers.
First of all, I want to reinforce that the information here, the information that I'm going over, is both too much and too little. So when I use this file, I mostly use it to make sure that everything that I think is important has been covered. And that might not include everything depending on what kind of company I'm looking at, what stage they're at, and the interactions I'm having with them. So number one is team. Let's see. I think I haven't quite, it's gone to A. Okay, so team. And I talked, again, this isn't necessarily the order, but I do think that the team is the most important part of a company. And working with the team as I'm going about and considering whether I'm going to invest in the company, this is the main thing that I'm thinking about the whole time, every interaction I have with the company. So, and I normally will spend about a month doing due diligence with the team. And I usually will also be doing it as a team myself. So there'll be a team of us analyzing the company as well as the company, the team that is the startup company we're looking at. So now I know that this can be kind of touchy, but I do expect someone on the company to be responding. And I'm not always right in terms of what I know. I don't always know everything there is to know. But if I make a suggestion, I have seen many companies. I've analyzed thousands of companies, and I've then lived with the results of them being invested in or not. And so if I make a suggestion, I'm fine with pushback, but I want an idea as to why something is being done the way it's being done. And this is where the numbers come in. I have different levels, which perhaps is too anal for certain people, but I tend to be a very numbers person. I want someone to share values, someone who shares values with me. And I see when I make an investment with a company, I am making a long-term commitment to that company. And I want to make sure that we're going to be able to work well together. So, for example, next week, I'm having actually the founder of a company that I invested in is coming, and she's going to be talking a bit about what her experience was and going through the process with me and with our company. And I want to make sure that this is someone that I feel good about, that I feel good about working with, and that also whatever the company is providing, that I'm comfortable with that as well. So there are certain things that I will not invest in generally, anything that's like illegal or that I consider immoral. I don't want to invest in. I really want to have as much of a full team as possible. Now, sometimes that's just one person because sometimes I'm doing very early stage companies, but somebody has got to understand the marketing. Somebody's got to understand how this product is going to get out, how this is going to be sold. If it's a med tech company and it needs to go through the FDA process, somebody has got to understand the FDA process. That's a real key thing. They need to show evidence that they can deliver, that they can say, all right, we're going to release a beta at this point, and yes, we can do that. I also look for diversity. Diversity is something that there's a lot of evidence that this makes a team better. This makes a more effective group. And so I'm looking for some diversity, ideally at both male and female, and at least two races or two strong backgrounds with that. Don't always get that, and I definitely invest in companies that do not have this, but I do think that it's a sign of a good, solid team. And again, since I'm working with very early stage, sometimes it's just one person, and how much diversity can you have with one person? Maybe not too terribly much. Okay, values. So the product or service value. This, not everybody agrees with me on this, but this is something that I find is really very powerful with whatever you're providing, that it actually adds income to the customer rather than just saving time or making the customer's life easier. If it actually gives them more money, then that is something that I find can be very powerful. Competition. Um, there's a lot happens in this area, can happen in this area. You can think of like the Tesla at the time when Tesla was first announced their cars, there really was no competition. There really were no electric vehicles. And so that it would be something that would show as being very valuable. Also, if there is competition, then it needs to be something that is difficult for the customers to live with. It's very uncomfortable, and so they're motivated to change. My wording's probably not very good there. It should be very easy for customers to change. I think it's probably what I mean there. All right, a moat. A moat is there, so a trademark, a copyright, a patent, major technology or infrastructure, or there can even be a logical moat. There can be, for example, there's a lot of times there's what a company will do is they will pull together so many customers and they'll have such a following that it doesn't make sense for anybody to try to take it from them. So that is perhaps more of a logical moat. All right, can you actually show what the product is? Because sometimes it's just an idea, and the more of it that you can show and you can demonstrate is there, the better it is. We can come back to Tesla with this, that when they first started selling their cars, there was no car. They just were selling the idea, which is pretty impressive. That doesn't happen so much anymore, perhaps. Okay, what about production? What is it going to need and what is it going to take in order to produce this? Okay. And then sales and marketing. And this is probably I probably should do this second. Traction is very important to me. I want to see that there's progress over time. And this doesn't necessarily mean paying customers, although it's awfully nice if it is paying customers. So I want to see some sort of growth. And here, not only is it numbers, but it's like algebraic numbers. But ideally, it's going to be paying customers. And income. What kind of income is there? How much have they had? Has it been growing over time? But again, a lot of this doesn't really work, might not work with an early stage um, company. They might not have income. So a lot of times people will ask me, well, what if I have no income? Okay, do you have followers? Do you have followers over time? Do you have, I mean, what evidence do you have that there's demand for this? And then, as Susie was saying, marketing. How are you going to do this? How are you going to sell? How are you going to get this out there? How are you going to let people know about it? How much demand is there going to be to it? All right. So, one of the things that is very common in a pitch deck is the market size, the SOM and the TAM and all of those, whatever those stand for, and I can never remember what they stand for. But how realistic is it that the market size, and the market size might really exist there, how much of that market is reasonable for the company to actually get? There was a company I was looking at recently, and it was a great idea and it was a wonderful product, but because of the cost, and the product was actually focusing on low end clients, and yet the cost was so high that while it might work in the United States or in a country like that, that might pay for this, it was a medical device, but it couldn't work in a developing country where they just didn't have the money. They wouldn't be able to have the money to cover it, even if they needed it. They might be able to do that. They might be willing to do that in Europe and the US, but that meant even though there was this huge market that needed their device, they didn't have, if they can't pay for it, it doesn't matter. Should be a very clear value proposition, something so the customers, and I'm sorry, was that you, Agata, was talking about the importance of the being very clear that there's value in what's being proposed and what's being made. All right. Now come over to here. So infrastructure. Again, I like to see numbers. I want to see what's happening. So what is the cost of acquisition of a customer? What is the churn rate? If you're not selling things, then if you're not yet selling, then how many people are following what you're doing? How many people are interested in what you're doing? And of course, money. How much money are you spending? Why are you spending that money? Is there another way that you can get around it if you're running out of money? That's something that is also pretty important for me to know. What is your runway? How long can you go if you don't get any money? How long can you last? When I watch pitch competitions, I can almost always tell who's going to win. The one who's going to win is the one who doesn't need the money, which is unfortunate. But people, if you can manage your money, people feel a lot better about giving you more money. Legally, are you set up okay? Have you got the legal people behind you need? Can you manage milestones? Do you have evidence of milestones that are going to happen? So you've been able to track in the past. You've been able to say, okay, we're going to do A, B, and C, and can you actually do that? Clean cap table. So this is who owns what of the company. With a reasonable valuation. Okay, what does a reasonable valuation mean? And I talked about this a few weeks ago, so I'm not going to go into a whole lot of detail with it here. And going over how to set up a cap table, how to manage a cap table, that's another evening. That's probably more than we can manage in one evening tonight. So exit strategies. When we do angel investing, we almost always want our money back. In fact, I think we do always want our money back, and as do you. I mentioned this the other night that there are other ways to manage this. It doesn't necessarily need to be an exit. You don't necessarily need to sell the company, but I want to see how my money is going to come back. I want to see how your money is going to come back. So if you are the founder, how are you going to get um, the results of all of your hard labor here? All right. I leave an area open for possible changes, for other things that I might need. Finances. All right, this is all numbers. I want to see what happened since the beginning of the past. I want to see the cost of the goods. I want to see the marketing, legal. Is there any debt? Is there anything like that? Because if there's debt, that debt will be paid off before an investor will be paid off. And so that would be a hesitation on my part. What have you got for the future? What do you think is going to happen in the future? What are you going to do there? What is potential future funding? So what if you don't get money? I'm always looking for, what other options are there? What other things have you thought about? What might possibly come? And what if you don't get this funding? There was a company, I really liked what they were doing. I thought the team was good. But I kept coming back to the founder. His only path was getting funding. That was his only path. If he didn't get this funding, then the company was going to go under. Well, if you're going to be doing a startup, you've got to have a backup plan, 2 or 3, maybe 4 backup plans, because we just don't know what's going to happen. And so you need to be flexible. You need to know where you're going, how you might be going. How are you going to get profitable? How long is it going to take? And now you'll notice that some of these, so for example, with a med tech, let's say that you have a medical device that needs to go through the FDA. Well, there's no way, if you're doing this for humans, that you can get any money until you've gone through the FDA process. And so a lot of these things don't really matter because it's a completely different animal. And so that's it depends on the kind of business that you have. So this, if when I'm doing a due diligence on a med tech company that needs to go through the FDA or some other process like that, I change what I'm looking at because it they probably have money coming in from a grant or things like that, which also changes what my share will look like. If they've got a lot of grant money that doesn't need to be paid back, then that makes it look better for me as an angel investor with what I'm putting in. So that's something to consider as well. Another kind of major category of product of company is something that requires a factory to be built. So coming back to Tesla, I'm reading a book about Tesla right now. So that's what I'm thinking about right now. They needed to build a factory. They couldn't build any of the cars until they had a factory. And they needed the money to build the factory. So it's another situation where they needed the money before they could bring any money in. And they needed evidence that there was going to be demand for this vehicle. Not so this, in some ways, this is mostly looking at something that might be more like a software company, at least in terms of some of the things I've said. All right, so that's my file. and I'm happy to um, hand it out. I hand this file out fairly regularly. So if you've been wildly trying to take notes, I'll give it to everyone, certainly who's here. And I'm doing something wrong with how I'm sending things out. So if you don't get it, please let me know, and I will try again. So, questions. What are your experiences? What have you got for your business if you've got a business? What do you think you might be missing? What do you think perhaps doesn't need to be? Yeah, Kyle. I didn't.
Hello, good day, good evening,
Oh,
everyone. Nice to see some regular faces here.
yeah.
Um, I'm Kyle. I'm the founder of Formatter. We do academic formatting, AI-powered academic formatting assistant. And yeah, I'm at the kind of pre-seed, pre-revenue stage, but completely focused in on that monetization aspect to it. I'm a solo founder, so Martha, I don't think I'll ever get. I'm not thinking of team just yet. You know, I hear all these horror stories about bringing in co-founders kind of late in the process, and I'm a bit of an expert in this field. You know, I'm a professor. I've been in academia for many years, and I teach entrepreneurship and business as well. Um, so yeah, I think the missing piece for me right now is this monetization, and that's interesting, and I'm really pleased to hear you talk about that as well. You know, is there a clear path to monetization? And that's kind of where I'm at right now.
Okay.
Just wanted to
Okay.
share.
Yes. Thank you. Yeah. So just because you don't have that doesn't mean that, that you're not investable. But and I think Kyle, I'm trying to remember, you do have some paying customers, don't you? Or is it just beta at this point?
No paid customers yet, but we have
Okay.
over 7,000 installs now on the
Okay.
app stores.
Okay, great. Thank you. Yeah. So that shows traction, and you can show that over time. And that's something that I hope you're keeping careful numbers on and tracking that so that you can show people that I've got this. Although it is a bit, so how do you plan on monetizing you, or you don't at this point? You don't know? Well, are you going to sell to colleges? Are you going to sell to individuals? Who's your customer?
So right now we're focused on B2C, but that's kind of our gateway to B2B. So focused on students and academics. If we get them to like it, then it's a very clear sell to journals and universities. I've already had a pitch meeting with one journal who's very interested.
Good.
Um, and yes, monetization, we have a new paywall that's coming up next week. My developer is telling me. And so the way that we have our monetization set up is that anybody who's writing something academically can upload their paper into our software and run a free, let's say, error check. So you run your free check, you can see all the errors. That's free. It will always be free. Now, if people want or don't have the time to do it themselves or are feeling a bit lazy, you can use our AI model to help clean up all that formatting and download the submission ready document. So that's where the monetization comes in with the assistance
Okay.
on correcting the errors. So fingers crossed, next few months, we're going to see some of
Some
our
money
first
coming
paid
in.
customers.
Okay, good, good. Yes. Yes. So actually I might have a customer for you. I somebody working on her PhD, and she's sick of all of the different ins and outs that she's having to wrestle with.
That's
Um,
it.
yes, that's it. So yeah, it's and I do think you're a bit early for funding. Um, and really it would be oh no, I don't, I know what I wanted to talk about. I like your B2C path first, because that's a way to get monetization, to get money coming in, to get traction, to show that things are working. And one of the best companies I've seen, that's exactly what they did. They did B2C, and they got, I mean, thousands, tens of thousands of users. And this happened to be a product for children. Once they had the individual users, then they got schools and they got libraries and they got hospitals and everything. It was much easier because there were so many individuals who were using their product.
I love to hear that kind of story.
Yeah, yeah. I like to tell that kind of story. Other questions, other people's ideas. What was missing? Yes,
Hi there, Martha. Thank you so much for today. I've learned a lot actually so far. But yeah, I work with a diverse team. Hopefully, that's something that
yes.
looks good. Yeah, but there's three questions in general, right? So the first one is, I'm like obviously I'm 29. I work with a team of that's pretty young as well, and I feel like I've come across a lot of information about it's very risky to invest in a team of young entrepreneurs as well. Like usually the average age is about 40, 45 of a successful startup. How much do you consider that in your decisioning?
I don't really worry about the age so much. I do like to see somebody who's already been through a startup, but that can be an advisor. That
Yeah,
doesn't have to be someone on the actually in the team. And because and maybe this, so I've done a couple startups myself, and my first startup was a mess. We did manage by the skin of our teeth to sell and to get an exit, but we made so many mistakes because we'd never done it before. And so even if you've got someone, maybe a professor or someone, or perhaps Kyle, I don't know if Kyle's, but someone who understands part of the challenges in doing a startup, and someone who can be helping you with that.
so would like for instance somebody who works for a VC company, would that be possible as an advisor?
I have opinions about VCs.
Yeah,
uh, VCs aren't investing their own. Thank you,
your
Susan.
own money.
Aren't investing their own money. What do they care?
Oh
I'm
yeah.
investing my own money. This is my
Oh
own money. If you
yeah.
fail, I'm out, right?
Yeah.
I don't get a paycheck. I either the companies I invest in exit, or I'm on Social Security.
Yeah.
Well, and I've got my investments, and I've got my retirement funds and that sort of thing. But
Yeah.
um, they they haven't actually been in the trenches. They
Okay.
haven't actually done it. They've probably seen a lot, but they haven't actually done it. And
Yeah.
I've done it. Um, and most angels that I know of have done it, have done a startup, and so
So
know
yeah,
what it's like day to day, the grind and the difficulties and the things that come up that you don't expect, and how do you deal with that? And
I know
so
Susan is asking a question, but I just want to quickly
yeah,
say as well, because I come from a family of business people. My dad ran a business himself.
that
My
helps.
and
That
then
helps.
also a few co-founders have business backgrounds that they come
Yeah,
from.
yeah.
So that would kind of come in handy. I think
That
that's important to state,
that
I
would
think.
help. And you'll notice that I didn't actually list it there, but I do like to see somebody who's done a startup. Now, with your family, and I'm not forgetting you, Susie, really, I'm not. Um, with your family, has it been like a small business,
Yeah, it's
a,
been a family-run business.
a
So
family-run business, which
yeah,
yeah, I like that, because then you understand the difficulty of making payroll every month or
yeah,
every couple of weeks. That um, and I might pick on Kyle a bit here, but there was a company that I would not invest in because the three founders were three professors. You know what? They're tenured. They don't have to make this work. If this
yeah,
dies, they've got their salaries and their positions they can fall back on. And yeah, I wouldn't invest in them. They were smart.
yeah.
They had a good idea. I didn't trust that they were going to follow through. And this was my money. And granted, they were working hard, but um, yeah, I wouldn't invest in them.
Okay, okay. Thank you so much, Martha.
All
I'll
right,
let
yeah.
Susan go ahead.
Susie, yes. Oops, you're on mute. Wait, you're on mute. We want to hear what you're saying.
Oh, sorry. The, actually, I wanted to reflect because, as you see here, today are many entrepreneurs and startups, and on the fact that you said, so if you already have money, more money will come in. That's actually true, but why? So, from my perspective, I don't know for you, Marta, but what I want to see is, so actually, from my perspective, investors want to see if able to make money. So are that's very important. So I don't actually want to see your money. And then we can also circle back to one of your points, whether you have some kind of traction, even free users or whatever, and what your plan is. When I want plan, I don't care about marketing plan unless you have a sales plan, because many startups go and get the first round of funding or bootstrap themselves, borrow money from moms, dad, neighbors, and supporters, and they put all the money into fluffy marketing. It's wonderful, LinkedIn. However, they cannot follow up with sales, and they wasted that money instead of sales or marketing, and they come from an investment and they cannot show anything. So like reliable people, reliable targeted users, and knowing your customer and having any traction that shows at least that you can make some money, that the art of making money, and then we can go forward in time. That will ensure me that you have an exit plan. So if all goes south, you are going to sell, I don't know, the furniture from your company. You will find some alternative solution to keep either your company alive, to pay your dues and pay your investors. So
Right.
actually, that's the logic behind, from my perspective, the money. So if you have zero, that's perfect. But how can you make zero to at least $1, euros, or whatever currency you use? So that's what I want to see.
So something that I have done in the past is advising companies, and I've advised companies in the US and in Europe and in Africa and in Asia, in Taipei. And every single one of the companies that I've advised in Europe and in Taipei have had government money. And none of the companies that I advise in the US or in Africa, Kenya, have government money. So it makes for a very different way of thinking about next month and next year. Um, so a lot of there's one of the European companies, a wonderful woman and lots of interesting ideas, but she's getting so much money from the government, she really doesn't need to get any customers. She actually does have customers, but she just keeps getting government money, and so she's, why get customers when you're getting government money? And another one of my European companies, she's she's going to run out of government money here pretty soon, and so now she's finally going, "Who's my customer?" And I'm going, "I've been talking about this for a long time now. Who is your customer? Is it the government? Maybe it's the government, you know." So I appreciate what the governments are trying to do, but you've always got to be thinking about selling and your customer and the marketing and getting it out there, or else it won't work. You won't get to the next stage if you're not able to get customers. And this is another important thing. A cheerleader is someone who says, "Oh, wow, that's a great idea." A customer is someone who gives you money. You want customers. You want people to give you money. Next time, Kyle, I want to see all of the people giving you money. Hope so. All right. Other questions? Other ideas? Yeah, Sheila, you're on mute, but oops.
Okay, so this is the question about due diligence, but I just thought I'd ask it while I've got you here on the other
Right,
end
yeah.
of the phone. Just a very quick. I don't expect that the answer to this would be yes, but I just thought I'd just put it out there just to know my own perspective. Let's say a company's looking for more than 200,000. Let's say they're looking for 400,000 or 500,000 or whatever, and obviously if they win, if they get the money funding through one of your rounds. That's great. But if you think a company or business is particularly interesting and you really have that much confidence in it, could your investor group consider putting in more than the 5K or whatever?
Yes, and we often do.
Okay.
Yeah. And in fact, so next week, one of our companies that we invested in, so she applied for multiple rounds with us. I don't remember how many, 3 or 4. And she won one of the rounds. But every round she was in, she was talking to the investors and she was telling about her company and she was pushing and pushing and pushing. And she came close to doubling the amount of money she got.
Okay.
And so from our investors. And that is part of what we want to do, is to introduce you to investors. So whether you win or not, we want to help broaden your community and the people who might be interested in investing in you. We want to help everybody move forward, is how I normally say it. And so
if you don't win, but you've met these investors, are they still investing through your network, or are they investing kind of like outside of that on their own?
They might do it on their own.
Okay.
Yeah, so there are a variety of different ways of doing it. And actually, what we hope to do, one of the things we hope to do this year is to set up a kind of a sub company to help the investments, to help that happen.
Okay.
So because it can be quite expensive to run an investment, depending on how you set it up. And so we're trying to get it to go so that it'll be more financially viable for the
Matthew,
companies.
you don't have to answer this just now because it might be going off the script. But for example, with the US division you have, if the founder is UK based, would the meetings be online, or would they be expected to physically go out there to the US to meet the investors?
No, it's online.
It's all online. Okay.
Yeah.
And would it be possible for me for someone to discuss company structure if they're doing the US and the UK, because which company should be the head company, which one should be the subsidiary, questions like that to do with companies.
Yeah, that's and so yes, if you're in the UK and if you're in the US, you can be both places and you can get funded through through both of our groups.
Okay, thanks.
After, yes, thanks for your patience.
No worries, Martha. Thank you so much for answering all these questions. But we had a conversation last week about go-to-market strategy and how to go to market and how important that is. And personally, I'm struggling with a chicken and egg situation where I need the
Right.
money to do the marketing to get awareness for the brand or app that I'm building.
Right.
But obviously, we need to go to market. So it's like I'm stuck with that situation basically.
Right. Yes. And that's part of why active angels are so important, I think, because you need to have people out there who can engage with the companies in a healthy way. And if you look at Estonia, so Estonia has what, 11, 12 unicorns, some huge number of successful companies proportionally. And then they took that money and they're putting it back into other companies and other Estonian companies. But they also have the government is very well set up for doing business and for being a very healthy business environment. And so I've actually recommended companies in other countries in Europe to set up their company in Estonia. They don't always do what I say, but and I'm not always right. But so yes, you're right. It's a chicken and egg issue, and part of what if I if I were mentoring you and your company, what I generally say is what you want to do is you want to get social media out there. You want to get followings. You want to get people knowing you and being aware of you. You could do a crowdfunding as a way to kind of hold you over. But you also in this day and age of AI, I would recommend that you do something very small that would give you money. So, like a newsletter or workshops. So, I'm doing workshops and I'm doing them for free. Um, and at some point, I'm going to start charging. Okay.
Yeah.
But right now, I've got to get my name out and I've got to get known, and I need to, because I mean, I, I moved here a week ago, all right, and give me 2 weeks, right? But I mean, that's exactly what I'm doing. Now I am in a situation where I have funds to back me up, and so I don't need to have the money right away, but I can't go too long. Soon I've got to start making money. And so I'm working on getting out there, getting known, putting a list of people, getting a list of people, and then meeting and meeting and meeting, trying to get the investors so that we can do a round.
Yeah. Thank you so much, Martha. Good luck. Wish you all the best as well.
All right, thank you. Yes, I gotta. Yes.
Okay, thank you so much for the opportunity. So my question is around so basically in my startup presently, we are trying to like fine-tune our MVP in such a way that it is more presentable. We have something, we've built our AI and it's providing the result we need, but we feel it is not well fine-tuned yet. Now, because of this limitation, we've not really started testing it out with people. And because it's a health product as well, we wanted it to achieve some level of standard before testing with actual people. Now,
So,
why this?
do you need to go through the FDA or a formal process?
No, no,
No.
we
Then
don't have to.
I would recommend that you do not spend any more time fine-tuning it. I would
Mm,
say get something out there proving that people are willing to pay for it. You know, even if it's just like a tiny little thing. This was the big mistake that I made in my first startup. The technology, I come from the tech field, right? The
yeah.
technology was amazing, but nobody wanted to buy it. But we spent a lot of money before we found that out. And actually, people do want to buy it. The product is now out on the market, but it's out there with people who know how to do marketing, which was not us.
Mm,
So
I got it.
I mean, you can spend, I don't know how much money you have, right?
Yeah, there's no.
Tweaking and making it better and making it good. And okay, awesome. But sooner or later, what is the smallest thing? So with AI out that we've got right now, and with I know medical devices and medical things are different, but could you get, thanks, Joseph, could you get, is this interesting enough to people that they'd be willing to pay €1 a month for a newsletter about it? That would, and then
Mm,
that would be two things. That would be money in the bank and proof that this is an interesting idea that people are willing to pay for. And what is the
mm.
smallest? You say you've got an MVP. Is there like a
Yeah,
little teeny tiny piece of it that you could put out that maybe someone would be willing
yeah.
to pay
We have,
€10 for?
yeah, we actually have our AI assistants for wheelchair users, and it's basically help them answer questions around posture, pressure management, and all of that. And it's basically built for that purpose, which means we fed with data related
Okay.
specifically to postural management. So
Can how many
yeah,
people
we have
can how many people can you get to pay you €1 a month for a newsletter about it?
that. That is the problem, which is why you see on LinkedIn I try to organize the programs. That is the event for wheelchair users, where I talk to them about a particular. For instance, I'm planning the one about pain management on
Okay,
wheelchair.
okay.
So
Yeah,
my
okay.
intention is to the program I can pitch Comfy AI as well. Yeah,
Yeah. So what could you do? Yeah, so like a workshop or an event or
yeah,
something to get people, how
yeah,
interested are people and to pay for this? Yeah, okay, yeah. So that's a good idea. Yeah, do a workshop or something like that. See who you can get
yeah.
to be interested in. All right.
Okay,
Great.
thanks.
You go, right?
Mhm.
Susie.
Is it okay if I also tackle the chicken and the egg situation?
Yes, yes.
I love that thing. So actually, Martha gave you wonderful pieces of advices. So the advice is perfect, and all the perspectives you proves is valid. However, there is maybe a tiny loophole here which may help you and turned out to be quite productive for startups I was coaching, is the old school guerrilla thing. So a good guerrilla marketing, even big brands today, Coca-Cola, Durex, etc., even though use guerrilla marketing and guerrilla sales strategies, even though they pay enormous amounts of monies in different countries to at least 7 different types of PR and marketing agencies. So they also use this even today. So maybe parallelly you can use a very nicely built guerrilla. So actually it maybe takes you, depends what you want to achieve, 1 month strategy planning, etc., to 1 week or 2 days, depends. And it can increase your marketing without putting a dime in it, and it can actually have a quick turnout, quite a big hype. And if you gradually put effort into, like, for 6 months, a week, it's perfect while you get the money. So it may generate you some money, may not, but definitely gives you targeted awareness, which you can show, which will lead to you getting money. And plus you have the other ways Martha told you. And if you incorporate it all in as a interconnected plan, maybe you sold a bit of chicken and a bit of egg, not entirely, but gives you a good ground for like making more chicken and eggs if you wish.
So Susie's going to be doing a presentation, right? Yes, for us in a couple weeks. And if you want to make suggestions as to what you want her to talk about, maybe how to get more chickens and eggs, right? Maybe that's what she's going to talk about. That'll be excellent.
Thank you. I would really appreciate the help choosing the topic. So what is of your interest would be a delight for me.
And that might be the best topic for that. So it is, we are at time. I'm happy to stay and answer other questions if people have other questions, but if you need to leave, I don't mean to keep you here past when you should go be putting your children to bed or whatever you do in your
I have one
evenings.
tiny question regarding due diligence.
Yes.
When it so far I have not invested yet directly or in a group to US and UK startups. Europe was quite easy, and Eastern Europe and the Balkans. So particularly on the Balkans, you have this so when you register a company, it doesn't matter if it's public or private, unless you are a really small, like more or less freelancer. It's called the RPR, and I can actually check their everything, the founders, everything about the company, their revenues, how much they generated, how much they spend, and it's lovely. However, in the UK, company's house is quite similar, but it doesn't cover everything. In the US, Secretary of State will just show me the public records. So how can I gain access? Because it's one thing when a company gives it to you, but usually before I invest, I check the company also from government, my lawyers, then they show me also their things. But
right.
Can I do it like properly in the UK and in the US? That's the question. Maybe it's confusing.
It's not as public. I mean, that's part of it being a private company. You have to trust them in some level that what they're saying is true. And so one of the things that when I'm doing due diligence with a US company, one of the main things I want to do is I want to talk to someone outside of the company. I want to be talking to other people who have worked with them. I want to talk to other people, their customers. I want to talk to if they have a public agency that's been working with them, if they have formal documents, anything like that. Yeah. So I would say that it sounds really nice actually to have that.
Yeah, there's no privacy in a private company where I live. So actually, and it's you have hard taxes and you have to comply to the law. So it's a bad thing when you are a private company owner. However, it's a good thing when you are an investor. So regarding this, when you ask for such documents, do you ask them for going to notary to like have a legal body, like to check the documents also somehow, and like being a witness, like giving a seal or something like that?
I don't usually ask for that, but I ask, so for example, I ask for their tax returns. And so that is from the government. That's normal. That is
cool.
usually, and it should be done by a professional person, so an outside professional person.
Mhm.
And
Cool.
that
Thank you.
can support the financial things. And then of course, if they have a patent or anything like that, I want to see that. Anything else that is evidence from the outside of the company.
This is mostly applies to the US, right? UK is
That's
a
mostly
bit
applies to
easier, I assume.
I have not invested in as many UK companies. I did just invest in a UK company, but I did not do due diligence on them.
Mhm.
So yeah, I don't know so much. That is a very good question. Does anyone know? I know that EIS, SEIS is very minimal, if you will. It's there's not a lot of due diligence in order to get that certification. And so that's a good point. We ought to knock them down and get all of the details. All the
Well, as
numbers.
far as I know, in the UK, the Companies House will give me an insight into shareholders, directors, a bit of annual accounts, but for like SMEs or small
Ex-chancellor.
companies, it's more difficult for bigger ones.
Okay. Yeah, that's a good point. I better find out. Because yeah, I don't know. I don't know what's required legally. Good question. All right. That in week 2, I'll do that in week 2 here in London. Any other questions? Anything else you want to bring up, talk about? Thanks, Mario. Good to have you.
Thanks, Martha. I'm gonna head out as well. Appreciate it.
Yeah.
Good evening, everyone, or good day.
Yeah.
Thank you for having us, Martha.
All right.
Thank you. Bye.
Take care.
Aftab.
Good evening, guys. Bye-bye.
So Aftab, question.
So I was saying, you said evaluation of the company is really important earlier, but obviously a realistic evaluation. What would you
Yes.
say? What would you say is a good realistic evaluation, and how would you go about doing that without
Well,
pre-revenue, with your pre-revenue?
yeah, well, I mean, early stage is risky. It's very risky. A lot of potential, a lot of risk. And that's partly why, for me, the founder and the team are so important. Because, again, with the right team, with the right founder, there you've got a higher chance of success. But even so, the expectation is that 60% will fail. Another 30% will not do real well, and only 10% will do well. That's partly why, if you're doing investing, you want to be investing in a lot of companies. You want to do careful due diligence. Thanks, Susie. That they suggest at least 20 hours of due diligence. We normally do. So the last company I did due diligence on, the company is doing a lot of fundraising, and they said that our due diligence document was much more in depth than any of the other groups they were working with. So that's a lot how I don't think that I am capable of doing quality due diligence alone. I almost always invest as part of a group because I want more support. I want other
Security.
people's points of view. I mean, I want want the company that I'm investing in to have diversity, and I want the people who are working with me on doing the due diligence to have diversity. I want to hear other people's points of view. I like what Susie was saying about the legal. Yes, I definitely want as many legal documents as I can get. And I want as many people helping me look at the company and analyzing things as I can get. Because that makes for a better investment.
Yeah. So the thing is, I've built a team of like 5, 6 people that I work with constantly. And obviously, we're all putting sweat labor into it. We've been working on it for about 2 years. We've pivoted a lot. But obviously, we're all also doing other jobs, other things. And it's only so long that one of us feels like we're burning out,
Right.
And that's where the
Right.
money comes in.
That's
Right. And
which
so,
is why startups are so hard.
yeah,
Absolutely. Burnout.
yeah,
And so and the expectation is that when you get angel funding, that it's going to be another 10, 15 years before you exit. Nobody says that except
yeah,
maybe me. But if you were to pitch in our round, if you said, yeah, we think we'll have an exit in 15, 20 years, you wouldn't get any funding. But that's probably realistic. I mean,
yeah,
I just had an exit like 6 weeks ago after 15 years. I'll take it. I
yeah,
didn't lose the money, but
yeah,
that is not what they said when they were pitching 15 years ago. And it was
yeah,
not what
no,
they intended, but it's what happened.
because things never go the way you plan it. That's life, you know?
You
And
just don't know. I mean, there
yeah,
was COVID, and I mean, but they kept going. And so, and maybe I was mean to Kyle, but um, how
yeah.
dedicated are you? How long can you keep going
No, I've
before
seen
you
my
burn
dad
out?
fight since he came to this country, so it's a different story kind of thing
Yeah,
when it comes
yeah,
to stuff with. But the point I was trying to make is obviously there's the amount you're raising, which can be dictated by the revenue you're making. But also, it means that I can keep the team together because I can pay them or like whatever, which encourages them to stay together and
to,
work
to,
or
to
like
keep going.
focus. Yeah, focus
Yeah,
as well. But obviously,
it's
when you put it onto a pitch deck saying that we want to pay people, it doesn't look too well as well.
yeah, that's not, yeah, you should not be raising money for day-to-day operations.
Exactly. That's why,
You've got to start bringing in money from customers,
yeah,
at least partly, to at
yeah,
least partly pay people. And then you can say, uh, you, um, which is, yeah, which is one of the things I'm looking for. So what's your runway? How long can you go before you run out of money?
yeah,
How long can you go before everyone on your team says, you know what, I would like to do something other than this.
yeah. It's fair.
I'm
It's fair.
I'm
Everybody has their own
tired
life.
of doing
Yeah,
this. I'm tired of, and which is why I don't invest in professors. because they've got an out.
no, no. It takes grit and resilience because obviously there's a consistent battle to figure out the problem because the problems don't have the normal answers that every other person will have.
Right,
You know?
right. It's
Yeah,
it's hard. It is hard doing a startup.
yeah,
Um, I I am I'm very grateful for people who are willing to do it and for people
yeah,
who do it well and are and I am happy to invest in startups,
yeah.
um, even with the high burn,
Risk.
even with the high risk. And actually, that's another thing is that if you look at our investments of what we've done as a group, um, we our companies are more successful on average than you'd expect.
Yeah,
Uh, and I think that's because they've got a team of investors who are all rooting for them. I got couple of weeks ago, I got an email from one of the companies I'm invested in, and I
Yeah.
loved it. I need to go back and find it and save it,
Yeah.
because they said, this is the progress we've made. Okay, good. This is the help that we need. Wonderful. You need help. Awesome. What can I do? How can we, this?
You
And
mentioned it on Friday as well, this
did
email.
I
Yeah,
was
yeah,
I was so pleased that they said that, so that we have a chance to help them, because
yeah,
one of our companies went under because they wouldn't ask for help.
yeah.
Don't
And I
do
think
that.
we don't know everything. We need to be able to ask for help. That's the
Yeah.
thing. And I
And
feel like absolutely.
the bigger the community you can build, the higher the chance you'll have of success. And so
Yeah,
that's what we do with our program. We bring
yeah.
together a community of investors and then the companies, and we help everybody work together to be more successful.
So is there a minimum amount your network invests in, or is it the maximum, or like
Um, I'm not sure I understood the question. I'm sorry.
because obviously you're a network of people, and we were speaking about investing £5,000 last week
Right, right,
as to
right.
mitigate risk. Is that £5,000 from like 5 or 6 different investors, or is like each
Oh,
person puts in a lot or whatever?
yeah. The minimum we'll work with is 20.
Yeah, okay.
Because again, we want to have that community,
Yeah.
and in order to do a thorough job of
uh,
due diligence, we have to have at least 20 people.
Yeah,
Ideally, we'd have 40 people,
yeah.
but if we don't get 40 people, we don't get 40 people. But we will not do it with fewer than 20 people,
Oh, okay, okay.
because
So 20 people will need to be interested in the idea,
yeah,
and then you invest it together. And
yeah.
that's whatever amount that they're
Well,
willing to invest.
20 people need to be willing to commit to the process.
Okay.
And so we haven't made a decision when we come together.
Yeah, okay.
We're starting, we'll look at the companies, and then the 20 people will look at them and see what they think is most useful.
Oh, okay, okay. So, yeah, that makes a lot of sense. Is that very similar to most angel networks, or is it just very particular to
No,
you?
we're pretty unique in how we do
Oh,
it. Most of them are either um, having somebody else invest their money for them,
yeah.
or it's kind of a onesie twosie kind of thing.
Okay.
So it's like, okay, I've looked at this company. I think this is a good company. Let me see if I can find anyone else in the network who will join in with me
Uh,
to invest in this company.
okay, okay.
Whereas,
So this is more of a collective, like it's
right,
one, yeah, which is quite nice in the sense that you're not alone in it and you can go through
right.
it together. Yeah,
So as an investor, I'm not alone. And
yeah,
as a founder, you're not alone.
yeah.
We're here, and we've all committed our money, and we're going to work through as a
Mm,
team who we think is the best company.
okay, that makes sense. And also, what's kind of the stake you kind of take from is it equity or is it a promise on the future? What is it?
Yeah, we normally do a safe, but that we work out with each company. It's done on a
Yeah,
one-by-one basis. And yes, we normally will take a stake, and I mean, it depends on the valuation of the company,
yeah,
depends on the kind of company.
yeah,
Um, so it's usually around 5%,
yeah, okay.
kind of depending, on a lot of different things.
Because
If
you want them to give you said this last week as well, you want to give the company more of a control over their product so they feel more
Right,
passionate about it.
right. I mean,
Yeah,
in my mind, you're the expert. I mean, I
yeah,
know a lot about business. I know a lot about investing. I know a lot about companies, and I've done this, but you're the expert, and I
yeah,
want you to be the expert.
yeah,
I don't want to do this.
yeah. As I
But
said, it's a babysitter situation. You want us to take care of it, and then you come in and check. You
Yeah,
know?
yeah. I just, okay, you're still alive. Okay, good. That's good.
Absolutely.
Can I help you? It's okay, good. We'll
Yeah.
go. Yeah,
What do you need? Tell me what you need, I'll give it to you. That's it.
that's right. And it's very unusual. We are a very unusual group in that respect.
Yeah.
And we talked earlier about VCs.
Yeah.
In my experience, VCs want to take your company, and if you're not successful, like really pretty quickly,
Yeah.
they want you to die and go away.
Oh yeah.
And they don't care. And that's not entirely true. That's not entirely fair, but it certainly is not.
If there isn't a rapid growth, they're not interested.
Yeah, yeah. They're not the community that we are working on building. So
Or
one of the
you've
things,
envisioned.
yeah. So one
Yeah.
of the things I really like about what we've done in the Seattle area is, so we have over 1,000 graduates in this from
Yeah.
our program in the Seattle area. And essentially every investing group in the Seattle area has one of our graduates in it.
Oh, okay.
So we can go, and let's say that we have a company that we didn't invest in, or we didn't invest
Mm.
enough in, or they need more, more investment or whatever. We can say, well, go to this group here. They're run by our graduates. They know our program. Give them this due diligence report, this 50-page due diligence
Mm.
report, and maybe they'll invest in you. And so it's an entire community. It's not just us or just this VC or
Mm.
angel group. We're a community, and we've worked together for many years, and it's been very powerful for the Seattle area.
Now that you've mentioned graduates, I'm doing a master's in accounting and finance. I don't know if I've mentioned, but I'm part of the Pioneers program at the university, which a lot of
Okay.
graduates are starting their own startup, and they have a
Mhm.
lot of advice and guidance they need in terms of angel investors finance. And I feel like it would be very useful for you, especially you want to create a network in the UK, for me to introduce you to the head of that program. I'll probably put you in touch with each other, and I think maybe, especially because you want to do workshops and start this, these people
That
might
would be
come
great.
on. So I'll put you in touch with it after this call, if that's okay.
That would
Yeah,
be fantastic. Yes, I'd really
yeah,
like to do that. I want to be doing what I need to be doing. The reason I'm here is to be, yes, making connections,
yeah.
and
And also part of,
doing workshops, doing presentations, doing all of
yeah, I'm
that.
part of a few accelerators and founders groups as
Mm,
well. So I'll put you into all of those connections.
that'd
So
be
if anything,
fantastic.
you can do something with them as well. No problem.
Great. Thanks so
Yeah,
much. Yeah,
no
that's
worries.
excellent. And if any of you know anyone who might want to join us, or just talk about angel investing,
Yeah.
that would be
I'm
fantastic.
going to a few networks in London that
Hmm.
are part of these angel networks, and you are my first angel investor that I've kind of have a personal relationship with. So I
Yeah.
feel like I'll introduce you to a lot of them once I've kind of spoken to them, so you
All
can
right.
make your network introductions as well. I'm more than happy
Great.
to do that. Thank you
Yeah.
so much, Martha.
Fantastic. All right. Well, have we done it then? Maybe I'll stop recording.